Welcome everybody, welcome to Making Money in the Markets with VectorVest. And it's Russell Markham here. It's my pleasure to have you along today. So here I am on camera and it's just gone 11 o'clock Sydney time. I'm presenting in Queensland, so it's 10 o'clock my time. All right, with that said, let's just note the disclaimer statement there. Please note our license numbers. We're licensed for general advice only. So we cannot take into account any of your past financial situations or needs. Please speak to your financial advisor for any personal advice. As always, past performance is no guarantee of future results. All right, as long as we're all clear with that, let's get into it. So what I've got here and what I'm going to cover today is I'm going to show you a strategy that works very well in a falling market. But, you know, there needs to be some caution here. I'll just put the camera back myself here for a second. The caution is that it can rocket away very quickly, but it can also whipsaw very quickly on you as well. So I'm going to share with you a strategy that works very well when the market's falling, but as soon as the market starts to show any sign of turning around, you want to be very careful. Okay, so how do we establish? Let's look firstly at establishing a falling market, and then I'm going to show you the strategy you can have a look at. I can't advise you personally, so just to be clear on that, I cannot take into account any of your personal circumstances. So at VectorVest, we've got this powerful market timing tool. This is the market timing tool that we use in VectorVest, and it tells us when the market is going up or down. And so what we're effectively looking at is we're looking at the average of all the stocks that we track, including LICs, REITs, ETFs, you name it, it's all baked into this number. So the average of all of the stocks, LICs, REITs, ETFs, etc., at the moment is $4.44 or 4.449. It might be a little bit small on your screen there, but to 3 decimal places, but 4.44 effectively. All right, $4.44. So if you go and buy all the shares, LICs, REITs, and ETFs out there right now, you pay around about $4.44. And why do we look at everything in the market rather than say the ASX 100 or the ASX 200 or the all odds? Because we feel it's more accurate, it's more representative of the entire market to look at the average of all the stocks, LICs, REITs, and ETFs. Certainly we can go and track, you know, the all odds or the ASX 200. We can do all that, but here this is the average of everything, and we feel it's very accurate at showing the overall feel of the market because it needs to include everything in there. So we can see what's been happening recently. Look, the market's been starting to fall away. And if I go back in time, you can see over here the power of VectorVest. You'll see there we'd noted to our subscribers the confirmed down signal came into play on 5 November 2025. We noted to our subscribers now was not the time to be looking to go and buy further stocks, LICs, REITs, or ETFs. One needed to be careful. The market had transitioned. And again, we can't give you personal advice. We've noted to our subscribers now, based on our mathematics, on our tools, now is not the time to look to be going to buy stocks. Conversely, if we look at the up signal that was given, a very good one, 1 May, we'd noted to our subscribers, now is a good time to consider looking to go into the market, and what a run that has been. And so you can look at the one prior, the down signal here. It was a very powerful, timely one there, kept you out of a lot of the pullback in the market from February 2025 through until May of 2025. So there was that quite a sharp pullback in the market. I think there was fears over the whole US elections, etc., etc. All right, so all that played out. Okay, and so you can go back over time and you can see there's been many, many signals over the years. I don't want to information overload you here, but you know, tons of very powerful signals. The global financial crisis, we kept you right out of that. If you go back in time, you can see how all the signals kicked in, but just concentrate in here in terms of what's in front of you right now, right? So here we are, 1 year and 1 month. Now, what we're not saying at VectorVest is each and every time there's a down signal, you need to rush out and go to cash, or you need to do something different. All we're saying is you just want to be careful. When there's a down signal, you might want to tighten up your stop losses. You might want to effectively not consider buying any further stocks, LICs, REITs, or ETFs, etc., etc. All right, so let's zoom it in into more recent times. Here is that down signal. So what do I do at the moment? You know, the market's pulling away. There's been a few concerns out there. Do I go to cash? What should I do? I can't advise you personally, but what I can say, just from a general advice perspective, you want to make sure, of course, that your risk and money management rules are in place. So what are your stop losses? Have you got stop losses? At what point do you protect your profits or minimize your losses? But what else could you do? What else could you do? Are there strategies that could make money in a falling market? And this is where I want to concentrate today, zoom in on this. What opportunities are there right now? So 5 November 2025. Let's do this. I'm going to go to the stock viewer tool in VectorVest. And I've typed in this ticker code BEAR, B-E-A-R. Nice and simple and easy to remember. BEAR as in bear market. So what is this? This is a contra ETF. So you might be saying, well, what is a contra ETF? A contra ETF does contrarian to what it's tracking. So in other words, here, if I look here, view full stock analysis report, you'll see over here. So Beta Shares Equities Bear Hedge Fund is an exchange traded fund incorporated in Australia whose objective is to help investors profit from or protect against a declining share market by seeking to generate the returns that are negatively correlated to the returns on the Australian share market as measured by the ASX 200. So to generate returns that are negatively correlated. In other words, do the inverse. So if the ASX 200 is falling, then you would expect bear to be going up. Right, well, if I were to go and put on a graph here, let's go and add a new graph. And let's see ASX 200, or actually if I type in 200 here, we can go and look at an ETF that tracks the ASX 200. Here we are. All right, so here's an IOZ. This tracks the ASX 200. All right, look at that. So you can see the ASX 200 has been falling away. Or I can do a, let's see here. Here's the AXJO. There's the ASX 200 index. Look at that. The market is falling away via the AXJO. So the question then comes down to, can we find something that does the inverse? And so effectively, bear notes that it does the inverse. Well, let's go and have a look. So let's go and graph this given stock here. All right, or ETF in this case. And I'm going to go and put on what we call a performance graph. All right, so what I'm going to do here is I'm going to look at the performance of bear, and I'll do it over the last couple of days, and I'll compare it to, so let's make this jump out a bit more. Here we are. Let's compare it to the ASX 200. All right, so here we are. So we've got the ASX 200 AXJO. Here we go. Let's put it on. Let's load it up. Let's change the style. Let's make it jump out a bit more. Let's make this, let's say, green. So it really jumps out. Here we are. Okay, so bright green. Look at the inverse. Look at the inverse. It's doing what we want. The market is falling as represented by the AXJO, the ASX 200. And what's bear doing? Bear is going up. So on the right hand side here is the percentage. All right. So this is where they start off. So let's just say over the last month. All right. Even Stevens as such. So starting off it goes. 0% returns. And now we're going to track it. And so bear ends up doing 6%. And the ASX 200 index looks like it's fallen close to 6%. Very powerful inverse relationship there. Market bear goes up, ASX 200 goes down. Let's park this to one side. We'll come back to this graph. I'll leave it there for now. What other ETFs are inverse ETFs? Well, let's do this. Let's right click. Let's view stocks in industry group. And so here they are, and I'll just open it up. So let's go and have a look at what each one does. So we looked at bear, does the inverse of the ASX 200. What about BBOZ? All right, so let's do this. Right click, view full stock analysis report. All right, so Beta Shares, exchange traded fund. Fund's objective is to help investors profit from or protect against a declining share market by seeking to generate magnified, so some gearing, I'm assuming, some magnified returns that are negatively correlated to the ASX 200. So BBOZ's got a little bit of gearing in it, a bit of leverage used. All right, let's see how this stacks up. So BBOZ, here we are. Let's put that one in. So this is ASX 200, and we'll make that one jump out again. Wow. So you can see the gearing is working in your favor. But, you know, it's a two-edged sword. You've got to be very careful because, you know, as the gearing can work in your favor, but also can work against you. So right now, while the market is falling, the ASX 200 is falling, the gearing is really helping drive those returns. So you can see over here, this one here is pushing what's that looks like close to 15%. All right, over the last month, it's gone up about 15%. Bear has gone up about 6 or 7%, and the ASX 200 has gone down about 5 or 6%. All right, let's keep the journey going. What else we got? All right, so hope this is of interest because you might not have seen this before. BBUS. What's BBUS? What's that about? View full stock analysis report. So, all right, Beta Shares US Equities Strong Bear Hedge Fund. It's got a bit of a ring to that name, isn't it? Currency hedged in an exchange traded fund incorporated in Australia, so all bought via the ASX, that seeks to generate the returns that are negatively correlated to the returns on the US share market as measured by the S&P 500 index. So this one looks at America. So although we can buy it in Australia, why would I want to buy BBUS if America is not falling? Certainly you wouldn't want to. So then the question comes down to, well, is America falling? Well, here I am in America, so you can get access to VectorVest United States as well. And what I want to do here is I just simply want to go to the market timing graph, just like we did for Australia. Let's tidy it all up and just keep it nice and simple and zoom it in. Oh, yes, I can see there's a confirmed down signal that kicked in. Then it sort of went up and now it's gone down again. And oh my goodness, look how quickly the market is now falling away. All right, so America is falling, as represented by all the stocks and ETFs and you name it that we track in America. This is the average falling away here. If you don't agree with all of the stocks being calculated there, what you can do, in fact, let's see. If I move to viewers, I'm going to go to watch list viewer, and I'm going to go to the S&P watch lists and look at the S&P 500. See, here we are in America. Here are all the stocks with S&P 500. Lots of information here. Don't inundate yourself with all of it here. I'm just going to simply look at the average. So this is the average on the S&P 500. All right, you can see here the earnings on the S&P 500 were going up, and the average was going up. Earnings are still going up, but the market's now rolling over. All right, so anyway, let's tidy that up for a second there. I'll take off the earnings, and I'll just remove that for now. Just simply want to look at the S&P 500. Yeah, all right, so it was going up. Now it's starting to fall away. And if I change this to let's make this a little bit easier to read. There we are. How about that? A line graph, and I'll make it an area. Now it jumps out, and it's really simple and easy to see. So you can see here, yeah, certainly the market is falling away, the S&P 500 in America. All right, so put that to one side. So beta shares doing the inverse of the S&P 500, yes, that would be worth considering because America is also falling away. Chances are when Australia is falling away, so is America. We typically tend to take the lead from America. So here we go, BBUS. Let's put that on and have a look. Oh, that's interesting. So you can see here, it's been a little bit slower to get going. Now it's starting to move up, but it's underwater. All right, so it's underwater. It still hasn't produced a positive result, but look at that. It's come from nearly negative 10%, starting to shoot up. All right, we'll park that to one side again. We'll come back. All right, let's look at the last one here. SNAS, Ultra Short NASDAQ. Let's have a look. View full stock analysis report. Let's find out a bit more. So ETFs, Ultra Short NASDAQ 100. Hedge fund is exchange traded fund incorporated in Australia, so you can buy it on the ASX. The investment objective of the fund is to provide investors with geared returns, so gearing involved, before fees and expenses that are inversely related to the NASDAQ 100. All right, so let's just quickly go back to America again. Here we are. And what I'll do here and that is, can we find a NASDAQ watch list? Let's see here. Overview watch lists. See if I can get one on the NASDAQ. Have we got one in here? I believe we do. There's many different watch lists that we've got in VectorVest. And here we are, NASDAQ 100, or the NASDAQ. I'll just pick on the NASDAQ. There we are. Okay. I'm going to view the watch list average across those 100 shares. Wow. I mean, you've got to give it to the NASDAQ 100. I know those that have bought like leveraged ETFs, TQQQ, for example, over the years have made a small fortune on those ETFs, for example, as the NASDAQ has rocketed up. But right now, where are we in the cycle? The NASDAQ is coming off. All right, it's been coming off for a wee while now, and it's starting to fall quite a bit. All right, so yes, the NASDAQ is starting to fall away, and so therefore SNAS may be one also to consider. So I'll put this in, SNAS, SNAS, that's the one, and I'll put that one on, and I'll make this jump out a bit more as well. And I'll change the color because we've got the same color there, ×2. It differentiates it. There we are. Okay, so here's the ASX 200. The ASX 200 is falling away. As the ASX 200 falls away, BBOZ, the geared one, doing the inverse of the ASX 200, as well as Bear, which is doing the inverse of the ASX 200. All right, they're moving up nicely, and BBOZ's running a bit harder because of the leverage effect. We're also seeing in America, we're seeing the US market falling away, and therefore BBUS and SNAS is also starting to benefit, although it's been a little bit sort of tardy in getting going, but it's starting to get going now. Just coming back to the graph I showed you where things started to turn around in the market. The market went from a great uptrend to now rolling over. When did that take place? 5 November. So let's line it up. 5 November. So if I come back a bit, let's just double check. Yeah, it was 5 November. Okay, 5th of the 11th. So coming back here for at that point there. All right, so let's zoom it in. All right, I'll just pull in just a tad, and I can come in here and change the date. So I'll just, there we are. We noted the market was down on 5 November. All right, so now it gets interesting. If you can line up your market timing, look at this. 5 November, we said be careful to our subscribers, the market's turning. Remember the green one. The green one here tracks the ASX 200, the ASX 200 index. It continued to fall. BBOZ and Bear shot up. So if I just put these two on here for now. Actually, Bear, I wanted to look at Bear. And the other one was BBOZ. This is the one with the leverage, right? So this is the leveraged one here on the ASX 200. So that rockets up. And then Bear, which is the non-leveraged, that goes up quite nicely too, but not as much as BBOZ. All right. We also saw America's markets starting to fall away. BBUS and SNAS. Wow, look at that. So there you go. It's interesting that because you can buy these ETFs, contra ETFs, just like you do a stock, just like you do an ETF. You just buy them through your brokerage, online broker, whoever it might be that you use. They're all listed. You can buy them in a self-managed super fund, for example. But again, check the exact records behind what you can and can't do in your self-managed super fund. But for myself, for example, no problem. I can go and buy these in my self-managed super fund. Again, I can't advise you personally. There might be different rules on your super fund. I can't say. But I don't have an issue, for example, in my self-managed super fund. And so when the market starts to turn around, these are ETFs that can assist in a falling market. Now, just a word of caution on it. If the market starts to show a turnaround, I've noticed that these will turn on a dime. Just the slightest sort of sniff, so to speak, of the market turning around, and they start falling away very quickly. All right, so that's what I found over the years, and so effectively, you know, if I'm up 5 or 10%, I'm often quite tempted just to say thank you. I'll take that off the table, and I'll look again next time the market starts to fall away. Anyway, next time round, if you haven't already done so, when the market starts to fall away, why not jot those codes down? BEAR, BBOZ, BBUS, and SNAS, and have a closer look at them to see how they perform as the market falls away. Or right now, you might want to jot them down and see how this plays out. And so the winner at the moment is BBOZ, you know, up nearly 10% since the 5th of November. Hope you got a lot out of the short presentation. Thanks again for coming along, and we'll see you at the next one. Bye for now.